So before we go on to look at some of the other scenarios in the S&P 500, we'll look at the Dow chart here. And we've got our 1 up, 2 down, 3 up, 4 down, and now we've got 1, 2 potentially, and then 3, 4, and potentially into our 5th wave now here. And it's important to note that we don't have overlapping waves here, but what we do have is waves that are pretty much the same size and duration, and so this gives a sense that this is all part of one count up and not a 1 up, 2 down, and then a minor 1, minor 2 of a larger 3. So although the Dow chart looks more positive, we have been noticing that Dow has been leading for a while, and that frequently accompanies a topping situation. Not necessarily long term, but it could be an intermediate term topping signal that the Dow's chart is stronger than other charts. Looking at the NASDAQ 100, you get a similar setup: 1, 2, 3, 4, 1, 2, 3, 4. And then, potentially we're in a fifth of a fifth now. Although, again, here we don't have overlapping waves, so it wouldn't be an ending diagonal. And we could certainly have a 1, 2, 3, 4, 5 for a 1 of 5, and then a 2 of 5 maybe down here, and then we start 3 of 5 up. So there's another possibility. We'll look at that now. So here's another intermediate term bearish scenario where we do complete an ending diagonal pattern, but what the pattern is ending is simply the first wave of the 5th wave of the major 3. So we've got 1, 2, 3, 4, 5, and then a correction of the move off of the March 15th bottom. And typically, well, that could come back to, say, retest this zone here. Or, typically speaking, these tend to take back, ending diagonal patterns result in corrections frequently which take back about 61.8% of the wave 1 up, of the wave up. So then you'd get maybe something like around 1300, which is the 61.8 Fibonacci retracement level, and then you'd get your 3 of 5 move from there. Another possibility is that we end up getting a 5-wave sort of expanding triangle pattern where we have this 1, 2, we made a 3, and we're still in the process of making a 4 with an A down completed recently, and today and this week we'll be in the process of making a weak B wave up followed by a C down for 4, and then a 5th wave up to complete a expanding triangle. And then we would get the failure. Now, if this would happen, this would actually be significantly more bearish, because this could be the kind of pattern that sets up an actual bearish turn in the market. So let's look at that. So here is, of course, the outlook, the bearish outlook that we've been keeping on our radar screen for quite some time. It's the wave count preferred by the bearish Elliottician crowd, and in this case, I mean, this is a legitimate argument. You've got an A wave up, B down, and we're in C. C come up a little bit short of the 78.6 Fibonacci retracement of the move from the 2007 high, and now we're in an ending 5th, ending diagonal 5th right now, and then when we break this trend line here, we could pretty much say that the bear market has resumed. So here we are in this 5th wave environment. Now, how are we going to be able to determine which of these scenarios is going to play out? Well, we need to look at the technicals. So let me go ahead and do that in the next segment of this report.